Talk, traffic, and vital emergency information they rely on. Text AM to 52886 and tell Congress to pass this bill now.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about how Medicaid irrevocable trusts operate. Todd, many people are afraid that if they transfer money to an irrevocable trust, they will be giving up control of their assets and will have to ask their trustee for permission to spend their own money. Now, is this a valid concern?
No, it's really not. And folks, when you think about irrevocable trust, please remember that there are many different kinds of irrevocable trust. There are some that require a loss of control, rigidity, inflexibility. However, the trust we're talking about when you're protecting assets from a nursing home allow the donor to remove and replace the trustee, allow the donor to have really an unbelievable amount of control over the assets that are in the trust. They can live in their house, they can manage and invest their own money, they can sell a house, they can buy a new house. When the money's invested, they can have the income come directly to them. Folks, the control you keep over your assets in an irrevocable trust is really something you must try to learn about. And that's why we're giving you away a guide today to help you understand these trusts.
Request this brand new guide from the folks at Cushing & Dolan at 866-848-5699. It's called Unlocking the Power of Medicaid Irrevocable Trusts. Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. 866-848-5699, or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Register now at dav5k.boston.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts. Do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning and welcome back to the Financial Exchange. Hope everyone had a nice, it was just a perfect weekend, really actually. So a nice, beautiful weekend across New England here as we head back to school season and the depressing end of summer as we close in on Labor Day weekend here. It's Mike, Paul, and Tucker with you on a Monday morning after Jerome Powell took the stage in Jackson Hole, Wyoming on Friday. We'll be discussing a little bit of what he laid out there as the path for the Federal Reserve. On Friday of this week, we've got the PCE preferred inflation gauge for the Federal Reserve. We also have earnings coming out really just from one main company that actually matters, which is Nvidia. They'll be reporting earnings after the bell on Wednesday, although Salesforce also reports after the bell, but really a $3 trillion versus a $250 billion company here in terms of what we're looking at. And one of the last companies to report their earnings, and also, in my mind at least, perhaps the most influential on the direction of the market right now in terms of just where people are getting hyped up about. AI has been the theme of markets for this year, and so those earnings will certainly be impactful. We head into September then. The next Federal Reserve meeting comes on September 18th. We also will have the jobs report coming out the following week on that Friday, which is the 7th of September. So a lot going into here before that next Federal Reserve meeting. And really all that the data points can do at this stage is set up the trajectory for how much rates get cut in September. That was really the message that I heard, that I think everyone else heard from Jerome Powell on Friday of last week, is there will be rate cuts. It's more a question of how much those rate cuts end up being.
And the interest rate market is really a good way to get an indicator of what the investment community is thinking in terms of the rate cut trajectory, where we've seen the U.S. 2-year Treasury, which is a closer proxy to what you're going to see from a trading aspect to where the Federal Reserve is going to go from a rate cut perspective. That's come down about 1% since May. It now sits at about 3.9% or so on the, it might be a little bit lower than that, but that has come down significantly. And if you look at just the futures market where they project rate cuts going forward, it's between either 0.25% or 0.5% is what we're looking at for that September meeting. And that jobs report that Mike highlighted that's coming out September 6th or 7th, as well as we'll get some CPI data for the month of August on September 11th. Those two economic reports are going to have the biggest impact in terms of what we see coming out of that Federal Reserve meeting on the 18th. And again, 3.92% in the U.S. 2-year Treasury. So that has come down significantly from where it was about 4.9% just a couple months ago in the month of May.
So I'll bring this up again. In my mind, I know all we're going to talk about is whether the Fed will cut by 25 or 50 basis points in that September meeting. It definitely indicates how confident or what's the opposite of confident?
Pessimistic.
I guess. Yeah, pessimistic they are about the state of the economy will determine where that rate cut goes. But if we take a look further out now, by the December meeting, which is December 18th of this year after the election, it is nearly now a 75% chance that rates are at least a percentage point lower than where we are today. If we take a look a full year out, so go all the way out to July of next year, obviously a lot more uncertainty in terms of where things are, but there looks to be about a 65% chance that rates are 2% lower than where they are today right now. So what does all that mean, I guess, for, interesting that the 2-year Treasury, I don't mean to, knock on your point here, Paul, about the 2-year Treasury going down to 3.9%, but practically speaking, I want to try and convey what all of this means for people that might be looking to borrow money to redo a seasonal porch, for instance, that I know you mentioned a few weeks ago, or waiting to buy or sell their home, because I am getting a lot of questions about that. Like, hey, do I just hold off because the Fed's going to be cutting rates in September? What's that going to do to my mortgage rate at that point in time? Because, even with all of this pessimism about the state of things, Mortgage News Daily has the 30-year fixed rate sitting still at 6.44%, which in very recent history sounds pretty attractive, but, for most homeowners out there, it is a pretty ugly interest rate that they're looking at.
Yeah, it is. And I've heard on another podcast, they were talking about one of the things that went on with the easing period that we saw, quantitative easing coming off of the COVID pandemic, is that the Fed was a huge resource for buying up and issuing a lot of debt on the market, and they've subsided. They're not buying back bonds. They're not issuing treasuries and other securities. We're in a tightening phase. And as a result of that, there's had an impact on the mortgage market where you're seeing a larger spread between where the U.S. 10-year Treasury sits versus where the 30-year fixed mortgage has sat historically, because there is a little bit less inventory. You lost one of its biggest buyers. The Fed would often be a buyer of mortgage-backed securities, which is basically a pool of mortgages. They're not doing that because they are in a tightening phase. So there's been some economic discourse out there that there's a little bit wider gap there. So where you see the U.S. 10-year Treasury, which is the bellwether that is used for the mortgage industry, 3.8% versus 6.4%, it's a wider gap than what you normally would see. You'd typically see that a little bit lower on the mortgage side of things, the 30-year.
To clarify, I think I heard you misspeak there, because I think you said you were listening to another podcast, which I don't think there are any other financial.
Hey, you got to source information from anywhere.
You must have just been listening to Chuck and Mark do a different show that you weren't on. That's the only financial news podcast I assume that's out there. So I don't know.
Yeah, everybody should listen to the Financial Exchange podcast if you're not listening to us live, of course, Paul.
Sorry, I'm
outlet.
trying to get information from other sources.
No.
I can't read the Wall Street Journal.
No,
and we're on YouTube.
It's not how it works. But nonetheless, that does seem to be the path going forward here. And yeah, to be clear, when the Fed cuts rates in September, I mean, again, what they say might end up moving the curve on the 30-year mortgage rate, but that's not what they control. That is not something that they are going to be directly impacting with their policy come September. And so, yes, you will see credit card rates likely decline slightly if the Fed cuts rates on the short end. You will see money markets and short-term CD rates likely coming down, although they already have been from what I have seen in many areas. So those things will be impacted, but whether or not we see a longer-term decline in mortgage rates really just depends on the path of this economy over the next few years. It is not all going to be tied out to what Jerome Powell says at the next meeting. And what he says at the next meeting is going to be, I can tell you exactly what he's going to say. He's going to say the state of the labor market is still reasonably strong, but we are now more concerned about that than we were about inflation a year ago. And we are going to be reacting to the data as we see it coming in, but we think that it's appropriate to cut rates by fill in the blank, either 25 or 50 basis points, and we'll see what happens next. The Federal Reserve is not some all-seeing being, some all-certain knowable entity that knows where this economy is going. What they've orchestrated so far, I have to take my hat off. It's impressive what has happened so far in terms of rates coming down, inflation coming down, and not seeing a significant yet spike in unemployment. There has been a spike in unemployment, but I wouldn't consider 4.3% to be all that painful at this stage. The question obviously becomes what comes next, but as others have pointed out, we are, I think, very critical of the Federal Reserve, and that's not just a today thing. It's not just, politics in 2024. Everybody likes to criticize the Fed. This has been a thing for 30 years. And recently, they've done a pretty damn good job. I have a tough time criticizing much of what the Fed's done over the last 18 months. But either case, let's take a quick break. I have a little bit more I want to talk about when it comes to the Fed, and then we'll give a little bit of an earnings preview when it comes to that giant AI company that will be reporting on Wednesday evening. That's next on the Financial Exchange.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning right here on the Financial Exchange Radio Network.
Last year, we introduced you to Mark Vaughter, CEO of Veterans Development Corporation. Mark is a career military man, and we're proud to have him back as the presenting sponsor of the 2024 DAV 5K Boston.
I joined the Marine Corps when I was 18 and served proudly from 1981 to 1984. As CEO of Veterans Development Corporation, my goal is to give back to the veteran community, many of whom are employees of this company. This is one of the reasons I am so excited to be partnering with the Disabled American Veterans Department of Massachusetts on this year's DAV 5K Boston. The DAV works tirelessly to support many of our disabled veterans and provide them access to critical services that help them live comfortably every day. I hope to be part of many more success stories of our vets being able to achieve their goals and dreams when their service ends.
Veterans Development Corporation is proud to be the presenting sponsor of this year's DAV 5K, taking place on Saturday, November 9th at Fort Independence in South Boston. To register for this year's race, visit dav5k.boston.
Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John. Enjoy perfect weather, world-class dining, incredible beaches, and a vibrant nightlife. Head to visitusvi.com and book your trip today. No passport is needed, then there's no money to exchange. Take your next vacation in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com to book your trip. That's visitusvi.com.
There's an interesting piece in Bloomberg today. Yeah, Bloomberg. There's been so much criticism of the Fed, obviously, and no small part on our show as well, although recently less so. I think we spent a little bit of last week's show acknowledging that for the last 18 months, really tough to criticize anything that the Fed's done, in my opinion. But piece in Bloomberg talking about that long-term criticism, and I think putting it in a different light, and really talks about how this has been constant, right? Quote, Alan Greenspan lowered interest rates too much after the dot-com crash in 2000. Ben Bernanke printed too much money to bail out banks during the 2008 financial crisis. Janet Yellen kept rates too low for too long in the mid-2010s. And Jerome Powell was too slow to see inflation coming, and now he's too slow to spot a recession. And the author's counterpoint here is, look back at the last 3 decades, and you've had, generally speaking, a period of time of low inflation and low unemployment. And those are the only two things that the Fed is genuinely in charge of. Now, it acknowledges, in between there, you had 3 massive spikes in unemployment and 1 massive spike in inflation, and so we shouldn't completely ignore that. But basically taking his hat off and saying, hey, I know we like to criticize the Fed, but look at the last 3 decades. Does anybody think that they've done a really bad job in hindsight over the last few decades? And I do struggle with that argument a little bit. Is the Fed the reason that the economy has remained relatively stable for 3 decades without big, giant spikes in unemployment and inflation? Or are they just overseeing a period where that has been the case? But I will admit that, in times of real crisis, I do think that the Fed has done a reasonable job of shining here. You think about few others. Ben Bernanke during 2008 had such a big role in responding to the state of the economy. It really was put out there and took some pretty bold steps that hadn't been taken before in order to tackle the problems back then.
I'm going to agree with you. We are guilty on this show of beating up the Fed from time to time, though I would agree over 2024 in particular, we have not been overly critical and we have lauded some praise on the Fed. But you make the point that perhaps we're just in a period of economic stability over the last 3 decades, but I think what you went to further follow up and say is that in times of crisis, they have acted swiftly, and the reaction to COVID is the most recent one where, yes, an argument could be made that there was a little bit too much accommodation from a policy perspective, or perhaps it went on too long, but the efforts that they took to step in really quickly to resolve what was a extremely challenging time, which there was no blueprint or playbook for at all, they did a really good job avoiding catastrophe, which is what you easily could have seen. And I remember sitting in these chairs just trying to wrap our arms around what type of impact this would have. And it was a very short-lived recession that we went through. A lot of credit goes to the Fed on that. Another piece that didn't even get mentioned in here, Mike, in the Bloomberg opinion piece is the reaction that they had back in March of 2023 to the Silicon Valley Bank collapse. They stepped in very quickly and reinforced Americans' trust and faith in the banking system by not allowing for those deposits that were over the FDIC threshold to be backstopped during that period of time. And you did see a big run on a lot of regionals, to be fair, in terms of deposit level. Yeah. There was a migration, but there was some confidence that they instilled at that point too.
It's another one of those, and you had moments like this in 2008 too, where at the time, you step back and say, should we be doing this, right? It's a bunch of billionaires that were effectively bailing out because they didn't spread their deposits out around other banks. And it kind of leaves a bad taste in your mouth. A similar thing happened in 2020, right? The Fed came in along with the Treasury and backstopped a whole bunch of markets. And I remember talking about at the time, oh, great. So now these cruise companies who don't employ Americans or pay American taxes have the backstop of the Federal Reserve and are now able to avoid bankruptcy and borrow a whole bunch of money. And so, the results of some of the Fed's actions are distasteful. But when I sit back and say, okay, but what was the alternative? Right? Like, oh, yeah, let's just let a bunch of companies go bankrupt and lay off a bunch of people. And would we have been better off as Americans without that backstop? Or in 2008, had they not stepped in and created a whole bunch of new rules about how they regulate banks and stepped in and bailed out a bunch of banks? Like, is there anyone in America who would be maybe Michael, who's the guy that was The Big Short?
Burry.
Michael Burry. Yeah, he would have been better off. But other than that guy who was, betting against the state of the U.S. economy and markets, like, is there anybody else that would have really stood to benefit from that point in time? And so the Fed has a tremendously difficult job with a tremendous amount of power. Sometimes the things that they do, I sit back and criticize. Like, I thought they were buying mortgage-backed securities and treasuries for way too long and contributed to inflation. But, man, that was tough to know at the time. And had they not bailed out Silicon Valley Bank, which they didn't directly do, others did, but had they not orchestrated a solution to that problem, how many other regional banks would just be belly up today? And how much more power would be concentrated at Wells Fargo, Bank of America, Citi, and JP Morgan? I don't love that either.
To me, they're very much like a referee. You watch any sporting event out there, whether you're a football fan.
Easy to criticize.
There's a million things to look at, and it's really hard to do it in real time. It's easy with the instant replay, slow-mo that we kind of get to do with the economy. The same thing applies. You like to criticize them, but it's not an easy job to do.
And anyone that criticizes them, I always come back and say, okay, but can you think of a structure that would be better than this? Right? Like, should we put Congress in charge of interest rates and unemployment? Like, is that a better idea? No, I think the system works pretty well. But like a referee, there's always going to be decisions that you
and there's flaws in every system too.
Sure. Nvidia reporting earnings Wednesday night, going to move markets in one way or another. There's some other earnings going on. Like I mentioned, the only one that I thought was notable would be Salesforce this week, although HP and Dell also reporting. What in your mind are you looking for out of this quarter's earnings report? And I don't know, will we ever see the Nvidia slowdown story that has just failed to materialize for those betting against the company over the last few years?
It has to happen at some point. It doesn't appear as if this is going to be the quarter for it, just based on what early projections are sort of out there from a Wall Street perspective. Nvidia, for its first quarter, the revenues were up 262% year over year, and they came in at $26 billion of revenue. So imagine you are a small business owner out there listening and that you have doubled your revenue by 2.5 times over a year period. That is just tremendous growth, and they've continued to do it to a point where for this quarter they're anticipating year-over-year revenue growth coming in at 110%. So just these numbers that if you are a business owner or anyone out there, to double revenue is so difficult, or you have to be running on such high levels of efficiency, and the profit numbers reflect it here too with Nvidia. It's a really high bar, Mike, and they've continued to meet it quarter after quarter. To me, oftentimes what I'm looking at with Nvidia is the biggest benefactors for Nvidia, or the companies that provide the biggest benefactor to the company as a whole, is those big tech companies out there. So we'll see what they do.
Let's take a quick break. When we come back, full market update with Wall Street Watch. That's next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Bye, guys.
practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This Veterans Day weekend, help honor all who have served this country. Join us on Saturday, November 9th for the 9th Annual Disabled American Veterans 5K Boston. It's a run and walk to support the DAV Department of Massachusetts. Saturday, November 9th at DCR's Castle Island in South Boston. Together, let's honor all who have sacrificed for our freedom. Register or donate now at dav5k.boston. That's dav5k.boston.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled A Day in the Life of a Retiree. Mike, one of the key focuses of this piece is about how to figure out how much income you actually need in retirement and where you start tapping assets from. How do you make those decisions?
Yeah, don't you hate the rules of thumb on this, right? Like, oh, I'm going to need 80% of what I had before. The answer is that there is no rule of thumb. There's no good one that you can use to figure out how much income you are going to need in retirement. Do you have a mortgage? What sort of travel are you planning to do? Yes, you won't be commuting as much. Maybe you and your spouse can go down to one car, but if all of a sudden your plan is to dramatically increase your travel budget, that changes everything.
And when you look at other things that can matter, it could be where's your family located? Are you planning on moving somewhere else? Do you have grandkids that you want to spoil? These are all things that are going to play into that discussion of how much money you need to retire on.
Yeah, no doubt. And so it really does start right there with assessing your retirement ability. It's what type of income am I going to need in order to just be happy. It's not necessarily about maintaining lifestyle. It might be a different lifestyle once you're retired, but will I be content with it? And what sort of activities and lifestyle am I looking for once I am done with that 9 to 5, once I'm done putting in the hours for working and saving for my future?
Our guide this month is titled A Day in the Life of a Retiree. The way to request it is by calling 800-393-4001. Again, it's titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, coming off a strong Friday rally driven by Fed Chairman Powell's speech from Jackson Hole, indicating that interest rate cuts were in fact on the horizon. Markets today are in mixed territory. The Dow is up by nearly 0.2% or 241 points. S&P 500 is off about 0.25% or 12 points, and the NASDAQ is actually selling off a little bit here, now down over 1% or 189 points. Russell 2000 is up by almost 0.75%. 10-year Treasury yield down by 1 basis point at 3.79%, and crude oil up 3% this morning, trading just above $77 a barrel. The big items on the docket this week include Nvidia earnings after Wednesday's close, as we discussed in the previous segment, in addition to another reading of second quarter GDP on Thursday and a core PCE inflation reading on Friday morning. Speaking of Nvidia, the Wall Street Journal is reporting that Chinese artificial intelligence engineers continue to access advanced American chips, including from Nvidia, despite U.S. export controls. Nvidia shares are down by almost 2%. Meanwhile, IBM announced it would shut down its China Research and Development Department, marking yet another major U.S. tech company to retreat from the country. IBM shares are up by 1%. Elsewhere, Boeing down by about 0.5%. Following NASA's announcement over the weekend that it would use SpaceX to bring back 2 astronauts from the International Space Station, Boeing said its Starliner was safe for the astronauts to fly home in case of an emergency. However, NASA said its risk evaluation was different to that of Boeing's. And PDD Holdings, the parent company to China-based retailer Temu, posted disappointing second quarter results where management said pressures on revenue growth would likely continue due to increased competition. That stock down by 30%. I'm Tucker Silva, and that's Wall Street Watch.
Interesting piece from the Wall Street Journal today. It's taking a look at inflation over the last few years. And we talked about this in 2022 quite a bit of how the government's own data on inflation, I heard from multiple people, it just doesn't seem right. And I pushed back on that at the time, but it's important to understand what those measures are. They are a national average of a pre-selected basket of goods that they pick out to try and make it indicative of a certain person's lifestyle. But that's not how any of us actually live our lives. And depending on where you live, what type of lifestyle you have, how much money you make, inflation was either a lot better or a lot worse, depending on your circumstance. Was this study done by the Bureau of Labor Statistics themselves or the Fed?
This was from
London School of
Economics.
So what they looked at was inflation in the U.S. specifically over a 2-year time period, May of 2020 to May of 2022. During that period of time, CPI rose by 14%. What he then did was broke all that data out and said, okay, well, what if you're in the bottom decile of income? How is your inflation scenario there? What if you're in the top decile of income? And during that 2-year period, at least, the group on the bottom actually experienced less inflation than the overall story there. And it's easily explained. It was basically because most of the inflation we were getting during that 2-year time period came from gasoline and used vehicles. Gasoline prices were up 132% in that time period, and new and used vehicles were up 30%. If you're in the bottom 2 deciles, you're mainly reliant more on public transportation rather than buying a new car. And so that was an interesting piece to me. But I think it goes to reinforce that when the BLS puts out these data points, they're not what the every American actually experiences.
No, it was an interesting study, and there was arguments in this piece made that perhaps inflation should be broken down into its impact on each decile of income out there. And to me, my head started to spin as to how you could possibly continue to measure that. It's something that you can only do with the reflection of hindsight as your benefit, to look back to see. It's so hard in real time to gauge, as we're getting these inflation numbers in, which decile is being impacted more than another. The other piece of that on the income side of things is that lower percentile, or the lower 25th percentile, had seen their wages accumulate by a pretty significant amount during the last 20 years or so, and saw a lot of growth during the 2020 plus era where the labor market really boosted a lot, and those lower income workers got a boost versus some of the middle income folks didn't get as much as a jump there.
It kind of did. That was the only thing it really brought back to me was hey, if you're extremely well off, inflation's been an annoyance, but not much more than an annoyance. If you're extremely poor, you couldn't really afford things beforehand. You did get a bit of a wage boost, and you got to take part in more of the government subsidies and benefits over the last few years, and your inflation wasn't as bad. But that squeeze on the middle class it seems to be what this spelled out for me more is the inflation itself in terms of the actual prices that middle-class Americans pay for was the worst. The wage gains weren't as solid as the lower deciles of income, and the overall impact to you if you're middle class and experiencing a whole bunch of inflation is likely the most painful. To your point, the only reason we care and publish this sort of thing is to learn about the state of the economy and then impact policy.
Right.
So I guess if you're going to start doing this on a regular basis, explain to me how it's going to change your policy before you start creating a whole bunch of work for no good reason. I might be more interested to see, regionally, how is average inflation playing out in the Northeast versus the Southeast versus the West. Like there are real things that you can do about that if there is, more of a policy thing based on, this is where inflation is the worst right now. Let's go and study why that is. Is it the housing market? Is it grocery prices? What's going on here? But again, you have to go back to the fact that, hey, this is government published data. Like, what are we trying to do with it? How is it going to impact anything that we do moving forward? And I'm not sure what you do with data.
Yeah, and it's always going to be different components moving. We had gasoline and cars moving during that period of time, but over another 2-year period, it's going to be different mechanisms that are moving at a different rate.
Do we want to try and tackle policies coming out of the presidential debates right now, or do we want to go? Let's go somewhere else. No, all right. Let's go there. So, let's. I hate going through all this, but it is
exclusive
important.
Look into Mike's brain there.
So, care policies from Kamala Harris are coming now front and center. So we've gone through the tax on tips. We've gone through some of the other policies that are coming out at the moment, specific to grocery prices. But there's a new one out here now for benefits for parents of newborns. There's apparently a $6,000 one-time benefit for newborns that she wants to roll out, a $25,000 down payment assistance for first-time home buyers. That's not directly related to parents. And then increasing the maximum credit to $3,600 per child as a expanded tax credit, expanded child tax credit. So let's focus instead on the housing policies, on specifically the child care type policies that we're talking about here, Paul. My initial take is parents are faced with a lot of high costs. But what exactly, my question would be, what exactly are you trying to fix here? Because I'm not sure what, giving a bunch of money to young parents probably makes those families better off.
Sure.
And makes raising children easier. But sometimes I think we conflate these policies to say, it's going to increase the birth rate. This is how we're going to fix Social Security. And I don't think it's going to do any of those things.
No, I don't think so either. And there's actually been studies done on this because South Korea has tried to institute policies similar to this, where they've tried to make it more financially bearable to have kids, and as a result, they rolled out some economic policies, and they found over that period of time there wasn't a substantial change to the birth rate. While if you were to talk to someone, finances play a significant part in concern as to how big to have your family, but it is not the end-all, be-all factors. There are lifestyle factors that we could go on and on about, and that's a whole different show, that can change just how likely someone is to have children. So to me, I'm in complete agreement with you that finances alone or a tax credit alone, throwing money at a problem isn't going to necessarily resolve something, and then you're just going to have to do this again and again. It seems like you're just setting a tough precedent, just throw money at a problem. I don't feel as if that's the best way to do it. The same thing applies on the housing front as well.
The housing one I'm much more opposed to because there you're just directly raising prices for all Americans. On the child care situation, you are doing that too, right? I mean, what would I expect to be the result of a policy like this? Well, I would expect for child care and other types of services to get more expensive.
Right.
If parents have more money to spend on those services and you're not increasing the supply of child care centers, then I would expect prices to go up. Again, this isn't the most extreme policy decision or proposal that I've seen out there. I am not so adamantly opposed to this one as I have been on others. I just want to be clear about what problem you're trying to solve. And if it's just, hey, families face really high costs for raising young children and we need to make that easier, okay, just, go into it eyes wide open that many countries have tried to increase the birth rate through policies like this, and almost universally they have failed.
Right. Exactly.
And that's what I would assume would be the result on the birth rate as well. Let's take a quick break. When we come back, we'll talk a little bit about index investing. Wall Street Journal's got an interesting piece on that. We'll cover that next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
When you stop working, you stop earning a paycheck, and if you don't have a good sense of what your plans are in retirement, you may be faced with some financial challenges. Hi, this is Chuck Zada from the Armstrong Advisory Group. In order to retire comfortably without that financial strain, you can either reduce your expenses or find ways to replace your pre-retirement income so that you can determine the kind of retirement lifestyle you can afford. Our new guide this month is called A Day in the Life of a Retiree, and you can get it right now by calling 800-393-4001. In it, we'll walk you through several considerations you'll need to keep in mind as you develop your retirement plan. Get your copy of this brand new guide today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Paul, there's a piece in the Wall Street Journal today, messing up the closest thing to a sure thing in the stock market. What are we referring to here when it comes to that sure thing in the stock market?
Well, basically what this piece is going over is indexing is a very popular topic in the investment community where you just buy an ETF, which is an exchange-traded fund, or it is like what I like to say, it's a basket of stocks that tries to track a certain benchmark index out there. So the Dow Jones, for example, is one, or the S&P 500, where these investment companies build a replica of those specific benchmarks and then just mirror it. There isn't a whole lot of management that goes on. And what studies have found is even if you are a regular Joe Schmo investor that follows that to a T and just buys the index and sits on it, that there still is a gap between what that benchmark index does through that ETF and what you actually generate in terms of an investor return. Now, some of these discrepancies or gaps in returns are obvious. Your 401k, for example, over the last 10-year period, it is not going to generate the same sort of return as a whatever benchmark you want to use out there because you're not putting all the money in at once. You're doing it gradually, paycheck over paycheck. And the same applies for just investing in general.
There seems to be a fair bit of confusion out there, so I figure I'd tackle this a little bit. ETFs are most often affiliated with index funds. Right. They're not all. Just as mutual funds often affiliated with active investment, there are index mutual funds, there are actively managed ETFs. They are very similar tools, but they are different, and it's important to understand those differences. But the main piece that I do agree with in this article is that it can be really tough to stick with that strategy of just, I'm buying an index fund, and I'm not going to brag about having owned Nvidia stock over the last few years or play into those trading hype because, one, that's what the platforms themselves want you to do, right? We've talked about how Robinhood was really incentivized to get people to trade. And, yeah, sitting at a cocktail party and just saying, yeah, I've owned the same index fund for a decade and a half and made a tremendous amount of money isn't as sexy as saying, oh, well, I just knew that Nvidia was going to be such a hot stock to own, and 5 years ago happened to go buy it, or whatever company you want to mention. I think, one, sitting in an index fund for decades can actually be an incredibly successful investment strategy. The only piece that I think you have to sit back and understand first, though, is the index fund universe is massive. There are index funds that, like you said, track the S&P 500. There are index funds that, heck, these days probably track cryptocurrencies. And so not that all of them are created equal. And the more difficult step in all of this is, again, understanding what these things all do, but then lining up what they do with your own personal goals, right? I mean, index investing is a beautiful thing. It's a much cheaper way to invest than we all did decades ago. But if you're using the wrong tools, even if they are the cheapest tools out there at the wrong stage of life, then you can still get completely screwed, I guess would be my overall context here. And we talk about this frequently, but hey, I'm using an index fund that invests in stocks to go raise money for my home purchase in a couple of years, and I'm just waiting for home prices to fall. Well, go take a look at what has happened historically when home prices fall. It's usually because the economy and the stock market are also in a terrible route. And so important to line up, again, not only intelligently using index funds, but how do you line that up with your own personal investment and financial strategy? We talk about this a lot, but if you have those types of questions, it doesn't really matter what stage of life, what stage of your savings period you are in. If you have those questions about, hey, how do I line this stuff up properly so that I am paying the right attention to it, so that my assets are working for me at the right stage of life, so that I can set those goals and really think about all of this intelligently, give the folks at Armstrong Advisory Group a call. We sit down with you personally to develop your own strategy and then fill in those buckets with the right tools, the appropriate tools for those stages of life for when you're going to use them. The number for the Armstrong Advisory Group is 393-4001. We have offices scattered throughout New England. Happy to sit down with you in person, over Zoom, over the phone, whatever is easiest for you. But give us a call to get connected. 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, we have talked about the fact that I don't think Apple's Vision goggles are going to work terribly well, and clearly the sales have not exactly knocked the cover off the ball. They killed their car that they were trying to develop, but they seem to have the next answer here for what everyone's going to buy and is going to boost their profits. They're making robots, just like Tesla. Robots are going to be the turnaround story for Apple. And this one confuses me, I think, even more than the car. I have to, step back here and say I don't know what they are doing here going for robotics, but that seems to be at least part of the investment that they are trying to make now is a development into robotics. And here's why I scratch my head at it. Apple has succeeded over and over and over again when they take an existing product out there and perfect it. And I don't know about the rest of you, but I don't have any robots in my life as I think about them today. I have a Google Home, but I don't have anything that could even be the closest thing that I can think of that could be construed as a robot is the thing that cleans my pool.
Well, it's Amazon's robot too, right? Astro.
Again, who's talking about that thing?
Right. But still, it's out there.
I guess my point would be I don't understand where they are going with a few of their latest products.
It seems like they just try to cast a wide net and hope that they hit on something.
But that's not their strategy. That's Amazon's strategy.
Right.
Amazon's strategy is throw everything at the wall. One of these things will stick and hopefully be a good business idea. Apple's strategy is we're going to be direct, we're going to be intentional, and we're going to perfect something. And they haven't had one of those in a few years. We'll see. Quick break, but a lot more to cover in the second hour of the Financial Exchange, including some Boeing talk. We'll be right back after this.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about how Medicaid irrevocable trusts operate. Now, Todd, it takes 5 years to protect your assets from the cost of long-term care. If you aren't sure you or your spouse will make the 5 years before going into a nursing home, should you even bother to do your estate planning?
The answer is absolutely yes, you should bother. And here's why, folks. There's people who maybe don't even start their planning until they're 80. It doesn't mean just because you're 80, you don't try, you don't plan, right? 85, you plan. You don't know whether you're going to get sick or not get sick. But by the same token, when you're 65 and you're doing your planning, you also might not make it past the 5 years. So just because you might not make it past the 5 years is not a reason to get this clock started. For example, lots of times when we put assets in the trust, we leave lots of assets outside the trust, especially IRA assets. So let's say you made it 3 years, but you had $200,000 in an IRA outside the trust. If I got $1 million worth of assets in the trust, I'm happy to spend $200,000 of my IRA to get past the remaining 2 years to get me protected from the nursing home with the $1 million that went in there. So getting the clock started is always better than not having the clock started.
Cushing & Dolan have been helping families like yours for more than 30 years, and find out if they can help yours too. Request this brand new guide called Unlocking the Power of Medicaid Irrevocable Trust. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
If you're getting close to retirement, you've likely thought about how you'll spend all of your free time. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and with no more 40-hour work weeks or hour-long commutes on your agenda, you might find yourself on the links in Florida or traveling the world with your spouse and family. The financial pieces of the retirement puzzle are important. Having a specific plan about how you want to live day to day in your post-professional life is just as important, and our new guide called A Day in the Life of a Retiree may help. You can get it today by calling 800-393-4001. In the guide, we're going to discuss how to connect your financial needs in retirement to where and how you'll be living. Call us again at 800-393-4001 and get your free copy today. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Protecting your assets is your most important financial responsibility, and Irrevocable Trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Welcome back to the Financial Exchange. We've got markets in mixed territory this morning. NASDAQ off 0.8%, S&P off 0.25%, and Dow up 0.25%. S&P was in positive territory earlier this morning and flirting with all-time highs again. If anybody's been not tuning in the last few weeks, obviously we had the dip after the SOM rule trigger from unemployment a few weeks ago, the carry trade in Japan, all that volatility very quickly turned around here as no real follow-on reports about other indicators of recession, and so markets continuing to chug along here and come close to all-time highs. In the bond market, we've got the yield on the 10-year Treasury down below 3.8%, largely on anticipation of the next Fed meeting, as well as the commentary from Jerome Powell on Friday on the state of things. Oil markets, you've got West Texas crude up about 3% this morning. That's on a production halt in Libya, as well as the escalations in the Middle East. And I think that's all I got in terms of markets that I'm interested in right now. So that's where things stand. Oil under $80 a barrel, still a very tenable place in terms of gas prices and everything along those lines. So let's shift gears here to a story that kind of intersects with some Massachusetts stuff as well. But the new Boeing CEO, barely a month, not even a month on the job, and faced with the latest, I guess I won't call this an emergency in the same way that Boeing's been dealing with emergencies over the last few years, but stranding two American heroes in space, not exactly a great look for the company, and that's what new CEO Kelly Ortberg is going to be dealing with over the next few weeks, because that Boeing Starliner capsule is being sent back home without the astronauts in it.
This is, this is a tough job to take over, Mike. Not only do you have problems within on the ground in terms of flying over the United States, but now you have to deal with problems in space too. It just seems like there are so many issues to address as you come in as the new Boeing CEO. And really, this would be a potential time for them to cut bait with this initiative. Boeing had signed on to do, I believe, about a half dozen flights to the International Space Station. So this is just a long line of obligations that they have going forward. It's a tremendous amount of money that that is burned into this space initiative, where costs have ran $1.6 billion in terms over what they had anticipated. This particular unit has lost $760 million over the first 6 months of the year. For a company that's burning $5 billion in cash a year, it wouldn't be hard for a new CEO to come in with a clean slate and say, you know what, I know that these contracts were agreed upon before my tenure here, but I'm not going to go down with this type of expense being funneled into this type of endeavor that's never going to make money.
Yeah, I mean, there are going to be some very tough decisions to be made as the new CEO there, because what we've largely been dealing with has been quality control issues, but you're running into cash problems too here. I mean, obviously Boeing can borrow tremendous amounts, but this is a very expensive program, and I would debate whether or not it'll ever be profitable, but certainly it's going to take an extremely long time. There are reasons why Elon Musk's SpaceX is a privately held company. It's because it's not going to be profitable for a very long time. Just be devastating to see this happen to Boeing, of them having to kill their space program from a number of different perspectives. But I mean, I'm going to just talk about it from the purely U.S.-focused national security perspective. If you are NASA or the Space Force, the last thing in the world you want is one vendor that's responsible for developing everything that you use.
Right.
It's not a great story, especially, I mean, actually, yeah, kind of offense intended to Elon for a moment here. Bit of a volatile guy whose own interests are not always aligned necessarily with what the United States wants, right? I mean, massive businesses in China, for example, a lot of competing interests when it comes to this. And look, the guy's a genius. He's created incredibly successful companies and is very, very successful. But I don't want any one individual running the only space exploration platform that is providing ferrying of astronauts to space, that's providing satellite launches for a military branch. Like, that's not exactly a great story here. And so we will see where it goes and how national security would respond if Boeing tried to cut that type of platform. I'm not sure that would be great for the U.S. It might be the best thing for Boeing,
right?
But
you have two different
be
sets of interests. You've got Boeing and the shareholders' interest, and then you have the national citizens, the concerns of the country.
I wonder what this does. I mean, in your minds, like, what does this do in terms of the blemish on Boeing as someone who frequently boards airplanes, right? Like, does this? I don't know in my mind that this worsens my opinion of Boeing from the average individual out there.
No, the damage has been done with the flights to the point where when you look at your ticket now, you'd probably rather see an Airbus on there in terms of the airplane manufacturer.
Do you think people actually look? I know people talk about looking. I've looked at a few articles where people say that they look. When I walk onto a plane, yeah, I pull out the safety card and I'm kind of curious, like, okay, what kind of plane am I on today?
Right.
Have you ever, even after these planes have gone down, looked at the model before booking your ticket?
Only when I was almost impacted by a flight being canceled because I was coming back on what I thought may be
a 737.
Yeah, exactly. But it wasn't. Or we had a bachelor party where there were some issues that some people were flying on those and the flights got canceled in response. But future flights, no, I have not.
I just think about how people book, and we've seen this just over and over. It seems to me the only thing that people care about at all,
price.
It's price.
Yeah.
And it's not even all-in price. It's advertised price on the website, not your all-in price once you add in baggage fees and all these other things. That's why those things have been so successful, is because we as consumers, all we care about is how much I'm going to pay for the ticket. Everything else I'll deal with later, but the only thing that I care about is that ticket price. And so in spite of the genuine shame and embarrassment I think that Boeing has brought to the history of its company, if they can figure their stuff out in the next couple of years and just start, again, let's not talk about space for a minute. If they can just produce planes whose doors don't blow off, it's really all they need to do in my mind. They don't have to innovate.
There's so few competitors that they're up against. And even Airbus is struggling, even though I brought up their name. It's not as if you have, it's not like the retail space where you're Walmart, Target, Costco, pick a retailer out there where there's always someone chasing your heels doing the same thing. you're playing in a very small pond in terms of other people that are in that field.
And that to me is the danger, is if you don't at some point just figure out how to execute this again, then you will have to compete more, because somebody eventually, like if you continue to screw up this badly and make it so that a new airline can't get a plane for a decade because of how slow you are to just get your processes in place, I would think that at some point China is just going to be salivating to get into the airline manufacturing space. I mean, I know it's a capital-intensive business. I know it's not easy. But, I mean, come on. We're leaving the door open for them here.
Well, that's where you can actually back antitrust regulations, where Boeing has got to the size and scale that it has had over the last decade or so, because a lot of mergers and acquisitions. And when you have Boeing screwing up as much as they have over the last 3 to 5 years,
becomes a national security risk.
Exactly. Because you look around, who else do we have to go to? Geez, we're stuck with these guys.
Yep.
You know?
That's where we are. Let's take a quick break. When we come back, we're going to be joined by Mark Hamrick from Bankrate. They've got a new survey out now on job seekers for 2025. We'll also have trivia for you next on The Financial Exchange.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
When you stop working, you stop earning a paycheck, and if you don't have a good sense of what your plans are in retirement, you may be faced with some financial challenges. Hi, this is Chuck Zada from the Armstrong Advisory Group. In order to retire comfortably without that financial strain, you can either reduce your expenses or find ways to replace your pre-retirement income so that you can determine the kind of retirement lifestyle you can afford. Our new guide this month is called A Day in the Life of a Retiree, and you can get it right now by calling 800-393-4001. In it, we'll walk you through several considerations you'll need to keep in mind as you develop your retirement plan. Get your copy of this brand new guide today by calling 800-393-4001. That's 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free, because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. Elder life planning can be overwhelming, so make sure you're prepared, or you could make costly mistakes that affect your overall plan. Irrevocable trusts are the most common type of trust that folks use for financial protection, and while they can be complicated to create, they help keep your assets safe because they contain specific protections that many of us need, like the possibility of eliminating your estate taxes. Cushing & Dolan are experts in elder law and taxation, and they can devise a plan that covers you in every area where issues can arise. Their new guide is called Unlocking the Power of Irrevocable Medicaid Trusts. Learn more about how these trusts can benefit your family by calling 866-848-5699 right now. That's 866-848-5699. Or you can request the guide right now by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Despite overwhelming support from Democrats and Republicans, time is running out for Congress to pass the AM Radio for Every Vehicle Act, which will keep AM radio in cars. Text AM to 52886 and ask Congress to bring this bill to a vote now. AM radio is too important to let this moment pass us by.
Message and data rates may apply. You may receive up to 4 messages a month, and you may text STOP to stop.
This message furnished by the National Association of Broadcasters.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
As promised, we are joined by Mark Hamrick from Bankrate.com. They just did a survey on the labor market. In particular, they were focusing on workers who plan to look for a new job in the next year. Mark, thanks so much for joining us this morning. Really appreciate it.
Good to be with you, Paul. Thank you.
So, Mark, as a backdrop, we had the quits rate, which is a proxy basically for who is moving in the labor market, reach a peak of about 3% back in March of 2022. That level has come down significantly over the last year and a half or so. But I was surprised to, gather from your survey that it still seems as if there are a significant amount of Americans who may be looking for a job in the next year. Tell me what you guys found from this most recent survey.
Yeah, I think this is all a result of having weathered historically high inflation with prices that are still broadly elevated. And it's indicative of the aspirations, I think, of Americans in a positive way, in the sense that they want to better their financial plight. And the best way to do that, typically, at least in terms of employment, is to find a new job. And so nearly half of American workers, and our survey is meant to sort of be a good cross-section of the American public, but in this case we narrowed it down to those who are working or looking for work. About half of those said they plan to look for a new job in the next 12 months, and about 25%, or 1 in 4, said they plan to quit a job in the next year. So this would suggest a fair amount of mobility still in place. And I think it's also it's supported by the fact that about 70% of those surveyed said that they are experiencing some level of worry about their job security. So, in this modern would-be age where there is very, little stickiness in the sense of, the devotion of a enterprise with respect to the retention of a worker. And then the other part of that is lack of sort of investment in one's own employer in this realm of at-will employment, meaning, you could be fired tomorrow. People are looking to protect their best interests, and that continues according to the survey.
Sure, and you mentioned, just for context for listeners out there, 48% of workers plan to look for a job in the next year. If we look back to March of 2023, when Bankrate, you guys had done this survey, that number was at 56% previously. So it's come down a little bit from where it was back in March of 2023. The question that I'd like to pose to you, Mark, and I'm not sure if you guys have access to the data, we sit at, anywhere between 3.5% to now a little over 4% unemployment during this period where we're referencing these two surveys. Is there any data that you have that goes back further, when the labor market wasn't so historically hot in terms of what people would be looking at from a job change perspective?
Well, this is a survey that we basically did coming out or during the early days of the pandemic, when we were talking about the Great Resignation, the spike in unemployment to near 15% in April of 2020, and then indeed that red hot job market. So the sort of nature of employment and worker priorities really became something that was a topic of much discussion, and based on what I'm seeing in the interest in this survey, still is. And one thing that we talked about a couple of years ago is that people would really like to have some kind of better balance between their personal lives and their work life. And 43% said they were going to ask for a raise. 42% said they were going to ask for more work flexibility. That could be hours work, could be remote, could be hybrid, some combination. And finally, or not finally, but just in the sense of my response here, is that I thought it was quite remarkable and reassuring that 29% said that they plan to start their own business in the next year, and leading the way, members of Generation Z, those aged 18 to 27. In that case, it was 4 in 10. And I would say that's really great news because we need innovation. We need entrepreneurism in this country. Some of those small businesses will end up being giant businesses down the road.
Definitely. Last question for you here, Mark. Certainly the labor market has really become into focus as inflation has got into a better place. What are you looking for going forward from a labor market perspective in terms of what we see over the next 6 to 12 months?
Well, we fortunately do an economist survey every quarter, and the findings have been pretty consistent on this in the last couple of quarters, where we still do they look for some further increase in the nation's unemployment rate, but not skyrocketing, so to speak. And they also look for more payroll gains along the line of what we saw in the latest month, where, it was basically, uninspiring with 114,000 jobs added. And I think that's why Federal Reserve policy is in the process of evolving, and that central bankers at our Federal Reserve want to make sure that they're attentive to both parts of the dual mandate, which is stable employment, stable prices, and maximum employment. And now I think their biggest fear is that you may have some damage to that stable employment, rather maximum employment part of the mandate.
That's Mark Hamrick from Bankrate going over the job seeker survey that they put together. Mark, thanks so much for the time today. Really appreciate it.
It's my pleasure. Thanks for having me.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Applebee's. Take your friends or family to any area Applebee's and enjoy half-price late-night appetizers after 9 p.m., including boneless wings, spinach and artichoke dip, and warm pretzels dipped in beer cheese. And don't forget to join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eating good in the neighborhood. Void where prohibited. Dine in only. Continuing our 80s theme trivia questions here on the Financial Exchange. On January 1st, 1984, the long-awaited breakup of AT&T finally began. The case brought forward by the U.S. Justice Department began in 1974. It was not finalized until 82. The decision against AT&T forced the company to break up into several regional bell operating companies, a.k.a. Baby Bells. Trivia question today: how many companies was AT&T forced to split in two back in 1984? Once again, how many companies was AT&T forced to split in two back in 1984? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the sixth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
This isn't intended to diminish anything that Mark actually said in terms of what he provided us, but man, that guy's got a better radio voice than I do.
Yeah, he's got some.
I like to think that every once in a while I come up with something intelligent to say to contrast that and to make it worthwhile. But Mark, I can see why he's putting himself on the radio. Man, that guy's got a good radio voice. I'll give it to him. Credit where credit's due. CrowdStrike will be reporting earnings Wednesday afternoon. So I guess I didn't mention at least one other company that's worthwhile mentioning in addition to Nvidia. Why? Well, their stock price since the botched update, I guess is what we're calling it, that literally sank like half of the world's computers back in July. Since that point in time, the stock, which was trading in the high 300s, has erased more than $100 per share of market cap, and they'll be reporting earnings Wednesday. They have really given nothing in terms of hints of the financial impact of the CrowdStrike outage, and that's kind of interesting because usually if you are going to be giving a material update on your finances, you do that before your actual earnings here. And so everybody's been kind of left in the dark. I'm guessing it's going to be a bit of a kitchen sink quarter where they kind of throw it all into one place. But this also the CrowdStrike outage occurred towards the end of the quarter. And so I don't really know what that financial impact will be. Obviously, the current quarter that we're in now might be more impactful in terms of customer damage and things like that.
Yeah, it's going to be hard to see it in the numbers for sure.
Let's take a quick break. When we come back, we'll have the trivia winner, of course, and then plug-in hybrids. Are they starting to gain some traction here in the U.S.? That's next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Discover the fish and farm market at the Boston Fish Pier. Open every Saturday from 11 a.m. to 3 p.m. in Boston Seaport. From fresh seafood to juicy tomatoes and sweet corn to grab-and-go options, indulge in the peak of summer's bounty. Support local farmers and enjoy the freshest ingredients all summer long. Sponsored by Mass Farmers Markets, a nonprofit dedicated to championing farmers markets across Massachusetts. Find a market near you at massfarmersmarkets.org.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled A Day in the Life of a Retiree. The big focus of this guide is about figuring out what you actually want to do with your time in retirement, not just the financial piece, but how are you going to spend your days? How does someone go about figuring that out, Mike, or starting to figure it out?
Yeah, Chuck, I love this piece because it is a lot different than our normal course of what we put together from the Armstrong Advisory Group. And what I tell people frequently, one, I'm not going to tell you how to spend your retirement. I have no idea. But the most successful retirees, and by successful, I mean the most content in retirement, who are not stressed about money, are those who have really thought through a coherent plan of not just what I don't want to do in retirement, i.e. work, but what I want to accomplish and do when I'm done working.
It seems to me that it really has to be something where you say, I'm retiring to do this, not retiring from doing that more than anything else.
And often that's the focus because, look, for a lot of us, work is extremely stressful. We've been supporting families for decades, and the allure of not having to do that, not having to pull in that paycheck anymore is really tempting. But I'm here to say that I've looked at a lot of this from a lot of different people in all sorts of different industries, And the most successful ones are the ones that are retiring because they're passionate about something that they want to do that they finally have time for.
Our guide is titled A Day in the Life of a Retiree, and you can request it by calling 800-393-4001. Again, the guide is A Day in the Life of a Retiree, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Trivia question today was, how many companies was AT&T forced to split into back in 1984? That would be 7. On January 1st, 1984, AT&T divided the company into 7 regional companies. Of those 7 regional companies, AT&T now owns 4 of them. Verizon owns 2, and CenturyLink owns the final one. Stephen in Chelmsford, Mass. is our winner today, taking home a Financial Exchange Show t-shirt, and is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Enjoy half-price late-night appetizers after 9 p.m. Join Club Applebee's to enjoy exclusive deals and specials. You'll get a free appetizer just for signing up. Now that's eat and go to the neighborhood. Void where prohibited. Dine in only.
Paul, I don't know about you, but the hybrid talk has really been taking off over the last year, and I think that I would have a tougher time making my next car an electric vehicle purchase, but I am getting more and more intrigued by these hybrids. I'm taking a look at Honda's site right now because that's my next car that we're going to need to replace. We're still driving a 2013 CRV, I think it is. Pretty ugly. It just is. It's like metallic blue.
How many miles?
About 130.
Yeah. Still got some time.
And it sits under the pine trees next to our house, so it's just covered in sap. So I don't know who's going to buy this thing.
Well, then your new car will be covered in sap, too.
We're removing the pine trees tomorrow,
good.
so that will be fixing that one problem. The price difference, too, is starting to come in. So I'm taking a look just at the CRV, which may or may not be indicative of the overall market, but the lowest entry-level hybrid from Honda is a $34,000 CRV. The lowest entry-level gas-powered CRV is at $30,000. So it's about a $4,000 price difference. I think I could probably justify that in mind, but clearly buyers are pushing back against the all-electric proposals that are being out there, and Ford taking a massive hit to their P&L in order to cut and run from their electric strategy over the last few years.
That story was one that played out while we were on air, and Ford was putting all its chips in to the middle of the table, and I said it at the time that, geez, they're really going to need flawless execution and for a lot of things to go their way with this type of innovation. I remember it clear as day. The stock was increasing on all this hype and news regarding their development in EV, but it's interesting to watch it play out over multiple years. Similarly, Toyota was lamented for its strategy with electric vehicles also, and not falling behind the curve and being more focused on plug-in hybrids. But here we sit where plug-in hybrids in the U.S. jumped 59% in the first quarter of this year compared to a year earlier, and their share of the market, to be fair, is still very small. It's only 2.5%, but it's doubled since 2022. To me, it is a great option because the fear with electric vehicles is that range anxiety, the charging capabilities, all of those issues that you run into there are less of a concern with that hybrid model. And particularly if pricing, the gap can narrow there, then it does make it an attractive option and something that I'd be more willing to consider before making that full plunge. And it seems like America's with us.
There's another version of hybrid that we talked about last week on the show. I know you weren't here, that is not available in the U.S. yet, but I think is going to sweep when it comes. So it's an all-electric vehicle with a tiny gas engine who can't even drive the powertrain. The only thing the gas engine does is recharge your battery.
Interesting.
700-800 mile range on these things when fully charged. You don't have that range anxiety anymore because you can still pump gas into it if you need to and recharge that battery. You're not worried about whether or not, you're coming back from the lunar eclipse and every EV charging station is taken in Vermont. Like, that to me is probably, I think Stellantis said they're going to roll out a model next year on the Ram, but I would imagine that within 5 years, you're going to have a few of those options out there. And if they are, that would absolutely be my next vehicle purchase.
So you're able to pull up to any gas station and cover yourselves from a charging perspective. Wow. That would be great. That would be great.
Summer in New England is spectacular, but winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are three of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you'll need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean Paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com.
Well, we've been talking really since the campaign kicked off about grocery prices. In particular, according to the BLS, grocery prices have experienced more inflation than the overall CPI and contribute to CPI, obviously, but about 28% increase in grocery prices since this time in 2019 is what we are experiencing right now compared to low 20s for overall CPI. And playing right into that is a merger that was announced well before campaign season, Kroger and Albertsons attempting to merge while the FTC sues them to prevent it. And genuinely, I have no idea where this one goes. FTC hasn't had immense success in breaking up mergers, but areas like this of brick and mortar, they've had more success than, say, tech, which has been their main focus. And so I think about the Staples Office Depot merger that they successfully blocked and others. I am not sure where this one lands, but I won't be shocked to see it get blocked.
It's hard on this one because Walmart, Costco, and Amazon and Trader Joe's and some of these other ones are not what the FTC defines as traditional supermarkets. So my argument would be for this not going through is that there are so many alternative options that we have out there, and obviously...
You mean the merger going through?
Yeah, exactly.
The block
right.
Yeah.
The block not occurring is that... And granted, this isn't really in our geography here, the listener base in New England. There isn't a lot of huge presence on Kroger or Albertsons in general, but there are so many alternatives out there, such as Walmart, Amazon, and Costco, Trader Joe's, etc. And then there's the local options that are available. To me, it just seems like a market that there is not like what we talked about before, Mike, with Boeing and Airbus being, two of the airplane manufacturers out there and not many others that do it, though there are some. And on the food side, retail, I just don't think that this is as big of an issue, but it'll be interesting to see how this case plays out. Perhaps I'm wrong.
So I was actually mistaken. I know that we didn't have any Kroger exposure here, but it turns out Shaw's and Star Market are actually owned by Albertsons.
Okay.
So do have some New England presence here. We're just not under that Albertsons brand, obviously. And so that would be taking part of this acquisition. And that's going to be the tough part in the government's case. You already outlined it, so I won't spend too much time on it, but you can very easily go to Walmart in almost every area where humans live in the United States and buy groceries there. You can go to Target and do the same. Right. And the FTC is trying to outline this case where they're just kind of not counting them as part of the grocery market. And I just don't see how they're going to be successful in that. However, they did very successfully argue that when it came to Staples and Office Depot. They said, look, these are the only two national office goods suppliers. Don't pay attention to the fact that Amazon exists. Just ignore that for a moment because they're not brick and mortar, so they don't count. And block this merger. And they were successful there. And this is not that different from that overall story. I thought it was a bogus argument back then. I didn't think it really stood, and you've seen damage to those brands since then with Amazon continuing its dominance. But nonetheless, that was a successful argument there. Will it be this case with the grocery chains merging? It's a good question, and I personally have a tough time believing that you're going to see. I guess here's where I land on it. I have a tough time believing that there's going to be damage to consumers from this because of competition from Walmart, Target, Costco, BJ's, etc.
Right.
But there's no way I can look at this and say, oh, this is good for consumers.
I agree with that.
But that's not the burden. Like the burden to block a merger is, hey, will there be harm to consumers? And it's tough to play that out. Is this going to be better? No, probably not. It's tough to envision a scenario where two giant grocery chains merge and then you see prices coming down. But will they definitively go up? I'm not convinced, and we will see if the FTC is able to block this, because certainly they're going to want to, and it definitely plays into the politics of the moment here with everyone making a very big deal of high grocery prices. Let's take a quick break. Stack Roulette is next on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Protecting your assets is your most important financial responsibility, and irrevocable trusts can help you. Keep your assets safe from probate and the nursing home by calling Cushing & Dolan right now at 866-848-5699. Get their new guide called Unlocking the Power of Irrevocable Medicaid Trusts. That's 866-848-5699, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Recent reports suggest that a record 4.1 million Americans may retire this year alone. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and if you're one of them, you'll want to have a retirement plan in place that focuses on several objectives. When to actually retire is a very important one to consider. Retiring early while giving you more time to enjoy life after work also means you'll need your money to last longer. Retiring later may not give you as much time to enjoy life's pleasures, but you'll have more time to save money. It's important for your retirement plan to strike a reasonable balance, and our new guide may help. It's called A Day in the Life of a Retiree, and it's yours free by calling 800-393-4001. The guide discusses these issues and more, so please call 800-393-4001. Once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Every single day, more than 2,000 U.S. companies face a cyber threat or attack. The Boston Red Sox in Fenway Park chose Centripetal as their official cyber network security partner to ensure the protection of their network and ballpark. Intelligence is the answer to protecting your network, and Centripetal is the global leader of intelligence-powered cybersecurity. The choice is yours. Are you going to be another one of those attacked companies? Or are you ready to experience a radical new cybersecurity solution? Find out why the Red Sox chose Centripetal at www.centripetal.ai.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Summer in New England is spectacular. Winter in the U.S. Virgin Islands is even better. St. Croix, St. Thomas, and St. John are 3 of the most incredible islands anywhere in the Caribbean, and their popularity has soared over the past 3 years. If you're ready for your next fabulous vacation, now's the time to check out the American Caribbean. Go to visitusvi.com, where you'll find all the information you need to book a trip that you'll never forget. The St. Croix Crucian Festival runs from December 26th to January 4th. Celebrate New Year's on St. Croix and enjoy world-class cuisine, pristine beaches, a wide variety of water sports, and some of the greatest musical acts the islands have to offer. Travel to and from New England is simple, and your stay will be hassle-free because this is the American Caribbean. There's no passport needed and no money to exchange. America's Caribbean paradise is waiting for you. Go to visitusvi.com and make your plans today. That's visitusvi.com. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. You can help our great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at DAV5K.Boston. The DAV 5K Boston is presented by Veterans Development Corporation.
Paul Tucker, I was dining out on Friday evening with the family. We went to a new restaurant in Dedham, Massachusetts, actually. It was lovely. A really nice experience. And right on the menu, they had something really clearly printed out here, and it said, I don't have the quote, but it said, due to Massachusetts law that prevents splitting of tips with back-of-the-house staff, we have added a 3% surcharge to the menu prices here, and that was printed right on the menu and was really clear on everything. And what I liked about that was that they did make it really clear as to why this is the case. And it is true that Massachusetts is one of these weird states where they don't allow tip pooling and that sort of thing. And again, just over-regulation in my view. But then it came to paying my bill, and I was just left with complete confusion. I had no idea what I was supposed to do there. Do I tip on top of the 3%? That seems ridiculous. Do I still tip 20%? Do I tip 17% to account for the 3? How does one go about doing the math in their head for 17% tip? Because I certainly can't. And so even though in that case, the restaurant, I think, did an admirable job of making it clear that they were doing this, why they were doing it, and explaining the whole situation, and then provided me fantastic service, I was left with a bad taste in my mouth because I had no idea how to deal with the situation, and was just left with general confusion about all of it, and becoming more and more prevalent. And now the FTC is stepping in and giving some advice to these restaurants. So I guess two parts of this. I can hate something like a 3% surcharge on a bill that leaves me a bunch of confusion, and at the same time think that it's a really stupid idea for the FTC to get involved in this. Right? The government, in my mind, has absolutely zero business telling a private restaurant how to charge their customers. I'm sorry, they have no business there whatsoever. If we get to a point where it's just McDonald's and Starbucks, and those are the only two restaurants in the United States duking it out for market share, sure. Okay, in that case, you can go regulate the hell out of them because they're monopolies. But the restaurant industry is one of the most ruthlessly competitive industries in the world.
Right.
There's no way the FTC has any business, in my mind, cracking down on junk fees at restaurants. Go focus your time on junk fees at Verizon and Comcast when they
StubHub,
when they do that, when it's a non-competitive industry. But the idea that the FTC has anything to do with regulating junk fees at restaurants, even as much as I hate them, is preposterous in my view. It's absolutely ludicrous.
Yeah, I think all that you'd be asking here, and I'm not sure if the FTC really needs to come down with their hammer on this, is transparency. Like what you mentioned, that it may annoy you that they had that 3% surcharge, but at least you understood it, and it was transparent, and it was clear to you where the cost was being derived from because there was an explanation behind it. The frustration that most consumers have, to me, is when it's underneath the surface, or you're unaware, or you don't get the why this fee is being added on there. And to me, if the FTC were to make any push that at least enforce more transparency, I'd be less critical of that. Though, if you're looking at the agenda items that are action items that the FTC has, it still wouldn't rank very high up on that list. To me, StubHub and Live Nation and the fees that they assess there, I'd prefer the transparency and the scrutiny go much more on that industry, which has become so consolidated that it's becoming close to monopoly, less so the restaurant business, to your point, which is so fragmented, so ruthless, and so razor thin in terms of margins that it's not as if you worry about price gouging on the restaurant front because you have so many options when it comes to that.
Over the weekend, I was seeing a number of friends that I hadn't spoken to in a while, and one of them, formerly, a number of years ago, worked for one of the companies that makes the actual devices that they turn around and flip to you for tipping, right? One of those companies that creates the devices that people put into those usually more casual restaurants, maybe a walk-up chain like a Chipotle or something like that, where they turn the screen around to you and say, do you want to add a tip to all this? And one really discouraging piece that he shared with me was that a frequent request from restaurants that had contracts with that company was to A, change the calculation so it was tip on top of tax, or B, just completely do the math incorrectly intentionally to say, 15% tip is actually going to be rounded up to this dollar amount instead of the actual calculation on there. Now, again, this was one person creating this allegation against these restaurants, but if there was any truth to that whatsoever, that a restaurant did something like that, I'm trying to think of the adequate punishment for that. My punishment for it would be that you're never allowed to accept another form of electronic payment ever. You want to do that? You just can only charge cash as a business forever. That's your punishment. Is you can't have those systems. You can't have anything like that in place. You can never accept a credit card, a debit card, or any other form of electronic payment again. You must use cash for all transactions going forward, because that would be just the scummiest possible thing that you could do as a restaurant.
So then the restaurant will just defraud the U.S. government by not paying taxes on the cash money that it takes in rather than the consumer.
Yeah, I'd rather them try and defraud the IRS than try and defraud the consumer.
No, I agree with you. I'm just giving you a hard time. It's just, it's crazy that there are practices like that out there, particularly when you sometimes see the technology. We're a little bit too trusting of just assuming, and we were talking about this off air, you just assume with a computer program that their calculations are always right on the money because it's computer-based and it's not done by hand, where you would scrutinize a receipt when you got to make sure that they didn't throw you an extra charge for a drink or something like that. But you're less likely to do that with the subtotal on some of those fast casual restaurants that you're mentioning, where it's just kind of a much quicker transaction that you're looking at.
Yeah, absolutely. So again, I hope that no restaurants were actually guilty of that. But the mere fact that he felt the need to bring that up to me was just so absolutely discouraging about how we pay for everything these days. Markets remain in mixed territory as we close in on the 12 o'clock hour. Dow barely positive, up 29 points, a little bit less than 0.1%. The S&P now sinking further, down 0.4%, and the NASDAQ down almost a full percentage point as we close out the show today. We'll be right back at it tomorrow, folks. Have a great rest of your day, and we will see you then.